Good morning, everyone. Welcome to today's Fintech Friday. I'm your host, Nicholas Belvo. Today, we have the chance of having Bertrand De Oliveira with us, adventurer, former head of product at Harmoney, and founder of Touch Payments, from all the way coming out from Australia. So we'll chat a bit about his story. Really cool story. And I think today is going to be a great discussion. And to add to it, we got Cigar, head of research here at Fintech Cadence. So Bertrand and I met 2 days ago now, and he's on a world tour on his motorcycle. Well, the Americas, essentially. Starting in New York, came up to Montreal, heading off to Alaska, and then down to Patagonia, and trying to build a startup on the way. So it's really fascinating story, and we're super happy to have him because back in Australia, he founded, well, you've launched 3 different startups, right?
Yeah.
And one of them was acquired by Harmoney, which is a peer-to-peer lending company out in Australia and New Zealand.
Yeah.
But first and foremost, maybe just run us through your story a bit, maybe the 3 startups and especially Touch Payments.
Sure. So first of all, thanks, Nick, for having me and giving me the chance to have a voice here in the Montreal community. It's a very special place for me to be here, given that I study here at HSC Montreal, 7 or 8 years ago now.
Right.
So I'm so happy to be back. So in a nutshell, when I arrived in Australia 7 or 8 years ago, with a background in finance, I really wanted to get my teeth into the startup community, build my own things. I started on the side to build the first business, which was helping people. It's called Sun Savers, was helping people to protect them from skin cancer. Okay. But very quickly, I realized I wanted to do something bigger. I had an opportunity to join an e-commerce website. I was backed by Rocket Internet, which is one of the largest startup incubator in the world. And this experience was amazing, given that we kind of scaled, very, very quickly. And that gave me an understanding of problems in the e-commerce industry. And from there, I developed a business which was helping SME or small businesses to get financing to grow, because I realized that the banks went backing us up as an e-commerce site. I was quite young, okay. But so that was the second business. But I just wanted to kind of make a difference into people's life. I wanted to have a business that was actually focused on consumer. And I find a pain point on an e-commerce site. At the time, we were driving a lot of people to the cart, but a lot of people were abandoning the cart, and that's still a problem today. So at the time, I was like, what is the pain point? And one of the pain points was people didn't have the money to pay for the things they wanted.
And even when we look back at e-commerce just a few years ago, people felt also maybe unsafe or untrustworthy of putting their credit card
as
online.
Well. Yes. So having a payment method that didn't require a credit card or a card, and I was giving consumer the option to receive the goods before having to pay. That was a very good way to bridge the gap between online and offline shopping. And that's the business that I mostly developed for three years and then sold to Harmoney.
Okay, very cool. So that's Touch Payments. And then why was Harmoney, well, could you explain what Harmoney does and what that conversation was like that you ended up selling your company to them?
Sure. So Harmoney is the largest peer-to-peer lending marketplace of Australasia, Australia and New Zealand combined. We've been operating for 5 years now, more than $1 billion in lending volume. And what we do is we basically match borrowers and lenders at the best possible rate for borrowers. One of the innovations of the company was developing a rate for risk pricing engine in the personal lending space. So we were kind of giving 36 different risk rates to borrowers, all kind of refined through machine learning and so on. And on the other side, on the from the consumer side, it's also super easy, 100% online to apply and get your money within 24 hours. On the lender side, you just get better return. So in average, after 5 years, the platform has been giving a 13% net return after losses to the investor community.
Wow.
Which is, pretty good investment.
So that has a big sales pitch for people who want to be. Could anybody be an investor on this platform?
Yeah. So we have, now we have all kind of investment from banks and institutional investors too. But as just what we call mom and dad, anyone can just open, apply, get an account, and start putting your money in and invest on it.
So P2P lending and lending in general is very interesting, especially because you have to come up with the new risk model. And as you mentioned that you used a lot of machine learning and 36 different risk parameters, how did you know that the model will be robust and it'll be as good as a bank 5 or 10 years down the line? How did you come up with that?
Yeah, great point. So the founders of the company have a major track record in the finance space. They both already they had built 2 different companies in the space for more than multi-million-dollar company. And so the chief data scientist that they had in the team was coming from one of those companies. So kind of the base scorecard, which wasn't really a machine learning scorecard day one, it was really a rule-based scorecard that was mostly developed from CreditFile and a few other data points. Had a track record because it was coming from a bank. But very quickly, our roadmap was all about making that risk assessment better than anyone else and investing into the right technology. So how did we know? And we took us very long time building a range of different learning model and testing out a few different data sources, and eventually testing, learning to then completely replace the original scorecard with a machine learning model that's better. And how we know it's better because it's been running for more than a year and a half, and the losses are way lower. And we've been able to reduce the price of the borrowers while keeping the margin of the business.
Right. Very interesting. It's for me, that's the core of any lending business, and that's why I get skeptical, because a lot of lending models come out, but they're not that robust or good. So it's very interesting and great that you were able to build a robust credit model.
But see, what I find interesting, because as we're discussing yesterday, that why once you hit a certain volume is peer-to-peer still interesting? Because why would you go the peer-to-peer route versus just going the traditional bank route?
Right.
And then so you were saying how the company, well, maybe run me through like the progression or the timeline of it from getting like individual investors to it transitioning to institutional investors.
That's a very, very interesting topic because from day one, we knew we needed to have institutional investors in order to be able to scale day one. So the founder launched with $100 million of institutional money available for debt capital.
Okay.
So then we didn't have limitation on the borrower.
Right.
Very quickly, we realized that on the mom and dad side, on the normal people, so many people were coming into the platform, and we had much more money available to lend than we had borrowers.
Okay.
So then we tried to put in place a limit, like let's say 50% for mom and dad and 50% for institutional investors, and then we would match them automatically. And we did that for a long time, almost 3 years. But then, as any business, when it evolves, it really comes back to what's your primary driver? Why are you doing what you're doing? And in our case, I think that the profit of the business was a key driver from the founder perspective. And when you look at the cost of institutional money versus a 13% average giving back to normal people,
right,
we then over time started to reduce the amount of lending we were giving to retail investors, as we call them. And more recently, they've just decided to actually close the marketplace and actually become...
So I can't make a 13% return anymore? Damn it.
I was hoping for that as well.
Because that's a really good return. So,
Yeah.
so when you start, like I see that as a great just marketing play, right?
Yes.
To be able to attract that base investor and then to be able to grow it. You get the borrowers who like the model because I'm guessing you're borrowing at a lower comparative rate to the banks, so it becomes attractive. But then once you have that borrowing funnel, then you could go and get money for cheaper instead of paying that 30% return.
That's right.
Okay, no, really cool.
But you don't have to. I mean, it comes back to the idea, why are you in business? Do you have to necessarily always go for the more efficient, more better way of funding money?
Right.
Or, are you trying to make a specific impact? Are you trying to help people find better ways for them to invest their money and give them better investment on their money? If that's the case, then you should probably keep your retail investors and find another way to increase the profits.
True.
So always come back to the mission. In our case, we over time decided to just keep focusing on the borrower side, and having institutional money also give you more flexibility in terms of the different experiments you can do on the lending side.
Yeah.
Which is a good way to bring some value back to borrowers.
Right.
Yeah. So one concept that I find really interesting is finance for impact, and financial inclusion and financial education is becoming more and more popular as a concept. I would like to discuss now just the differences between Canada and Australia. So Sagar, you know what's going on throughout Canada very well,
Right.
and for Australia. So what is there still that drive for capitalism, for constant growth, or is there also, because now in Canada what we're seeing is more and more companies and startups, especially fintechs, trying to go to help. I'm just going to say in French, Monsieur et Madame tout le monde, who don't have tons of assets and can invest millions of dollars, because that switch is removing like a very interesting investment opportunity, so to speak.
Mm-hmm.
But the company chose to go otherwise for its own profits. What does it look like, the general like startup or corporate ecosystem in finance, or more specifically in fintech in Australia?
I mean, the big thing that's coming up in Australia right now in July is the implementation or the opening up of open banking.
Right.
So open banking is going to be always a revolution, I think, for the space. So something I'm interested to understand where you are here, but over there, so the bank open banking really just means that the banks are providing API to the fintech community to access consumer data with consumer permission. And that's going to, open up new businesses, but also just make it more frictionless, more convenient for consumers to share the data and get value back from that.
Right. It's very interesting in Australia because it's more like open data as compared to open banking. So it's not just the banks, but the telecom and energy sector. So all the data for all the consumers.
Seriously?
All three industries will open their data sets or on everything.
And then I guess you could use them together to...
Exactly right. Yeah, it's very interesting. They're taking a very different approach. So in Canada, we are still in discussion mode. Open banking, the topic of open banking picked up a lot of steam last year, I would say, and everyone has been talking about it. And based on my understanding right now, the federal government did an open call for consultation from everyone involved in the fintech community a few months ago. So right now, the government, I believe, and the regulators in Canada are looking at the best practices from all over the world and trying to understand what is the best path forward within the next 1 or 2 years. There are APIs available. RBC has an API where developers can access information on a consumer, and Plaid, which is like a data aggregator, similar to Flinks in Quebec, is also putting out APIs where developers can start a free trial and play around with consumer data. So it's getting there, but compared to other countries, we are still very early stage in open banking at the moment.
And what makes that switch? Why did Australia move quicker on this front? Was it a government initiative, or it was more the corporate side that says, look, I think this would be good? And what's that looking like in Canada? Because you're saying that the government's looking into it and seeing what's going on around the world. Because we spoke about recently, 2 weeks ago, how in Italy, all the banks are going to be using blockchain for their reconciliation.
Right.
And that's a government-led project to be able to say, all their banks, this is how we're going to move forward because the technology makes sense. In Canada, what's that going to look like, and what happened in Australia that made that switch towards open banking? or open data in general?
Yeah, I think in general, Australia has been quite innovative in trying new things. I mean, Australia, the stock exchange in Sydney was the first stock exchange in the world to move through blockchain, and it was a pilot a few years ago. And then many countries looked at that as a
case
study. And I think a similar idea with open banking. The banks and the government wanted to be one of the first ones to do that. I mean, the Australian bank are the most profitable bank in the world. So doing that has only positive value for consumers. And the Australian government, in terms of regulation, is very, very strict in terms of, like, the lending industry is very strict, always trying to do the best thing for consumer. So maybe that's one of these already initiatives that's here to kind of make a difference.
Yeah. It's really hard to say. I don't know what the banking landscape in Australia is. Is it that they have only 8 or 10 major banks, or 4 major banks? Okay, so it's very similar to Canada, and I believe that it's just the fact that other countries are doing it. It's like the bandwagon effect that we call in economics. One person is doing it, so all of us will start doing it. And Canada and the countries where, for Australia now, for instance, as well, where the competition is much lower in the banking industry, they take their time because they can afford to do that. They're not scared about a small bank eating the market share. But in the UK, it's a completely different game. Even in France and other European countries, there are a lot more banks and there's a lot more competition. So they have to move faster if one bank starts innovating on the technology front. So I believe that's why some countries are moving ahead faster as compared to others. That's my understanding. But it's more like classical competition, making sure that you keep the market share. If you look at the annual reports of Canadian banks, it just keep growing up. The profits are always going up all the time. Even during 2008 financial crisis, we were affected, but not that much. So the banks here have the luxury of waiting and then seeing what is the best practice, which is kind of good, because then we can learn from all different areas and implement a system that is better than everyone else.
Okay. So I want to know, like, have you guys already seen benefits from opening up this data in Australia? Do you know, since it's so recent? Or if you don't know, what would you imagine the benefits to be?
I haven't heard of no, I don't know a specific startup already built on open banking. The benefit is going to be that as a consumer, you then easily have the choice to share your banking data with anyone you want to get the best product you want, right? So think about lending for any your bank account. Hold on so much information about you and how you spend.
Sure.
So if you provide that to a company for you to buy many, whether it's football money or have a cheaper insurance or phone, or if you're waiting to share your data with someone, you can get some value from that, and that's just great for consumers.
But I have the same opinion. It's giving the consumer more choice, right?
Yeah. The other thing is also giving the consumers option to integrate their banking activity with something they might already be using day to day. Like
exactly,
you could create a bank account through API via the bank, but with another kind of user experience.
Right.
And I don't think the bank have been known for especially awesome user experience. So maybe we see some new player coming in with very good innovative way to interact with users, and then the bank just act as a back-end platform.
I completely agree. It's this debate of who does the data belong to? Does it belong to me? Does it belong to the bank? It's my data, and I should have the option to benefit from it, to use an app that allows me to manage my finances better. If RBC, BMO, or any other bank isn't providing that tool, and if a fintech can provide that tool using open data, then why not?
Yeah.
So it's empowering the consumer to have more information and more choices is what I feel is the crux of open banking in general.
Okay. I want to shift the conversation now a bit to, one of the motivations, because you're speaking about the mission earlier, and we brought it up with financial inclusion and financial literacy, that, so before the show started, asking him what the difference was versus just using your credit card versus using touch payments. And essentially, well, as he said, it's, some people don't want to enter the credit cards, and previously that was a big pain point. But credit cards are also one of the main ways people go into consumer debt, and that has a snowball effect of growing. So you've witnessed this firsthand. The idea of touch payments was essentially to help people get what they want when they want, but when you look on the other side of the coin, it could create problems if they don't know how to manage that. So with that experience and knowing, the good and the bad, what do you think fintechs can do such that it happens to less and less people, and that consumers maybe learn more about their finances and stop going into such debt?
So, first of all, it's very difficult to stop people do what they really want to do, right? So,
I want to get into debt today.
And you laugh, but we had people even coming into the office and wanting money badly for whatever reason, right? So I think first you kind of have to protect in the background, and that's kind of the government job. In Australia or in New Zealand, you're building very, very terse regulation in terms of how the fees can be implemented, how the contract, how the user experience needs to be done, and having resources on the government side to actually do verification. Verification on the user experience, but also in the back end to make sure that there is the right implementation in the platform to protect consumers. And if something doesn't feel right or if something is not right, then the government should attack the fintech too. So that's one way. The other way, or the one is really, as a founder of a fintech, you really have to wonder why you are in business.
Mm-hmm.
Are you in business here just to make some money and build the biggest company you can and then exit through a tracer and IPO, or are you here to really solve a problem that's meaningful to you? Is meaningful because of your past experiences or someone from a family or friend, and then staying true to that in day-to-day, in your roadmap, focusing on your mission and your consumer pain point rather than always going after what's giving you the more bang for bucks, is something that every founder needs to think about.
Yeah. So, Gar, what do you think on that? How can we just help, and this is going to be a recurring theme this year, but I think throughout the years, because as more and more people become aware of the power of fintech and open banking and just a better financial education, what do you think fintechs can do to reduce the amount of debt consumers have?
Reduce.
I don't think eliminate is necessarily, it would be the holy grail. I don't think that's necessarily realistic right now, but I think reducing is.
I really, it's a very complicated, because like Bertrand said, that consumers or people will do whatever they want to do, and that buying that new really expensive car or spending money on a vacation will always be enticing. We can educate people when it comes to savings, and there are a lot of fintech startups that are doing that. There are fintech startups that are helping consumers come out of debt. But human behavior in general is about instant gratification, and that is where debt comes into the picture. Like you mentioned, there are people just knocking on your door, right? And so if we develop better financial habits, and fintechs will help to do that, and we provide information to them on a constant basis. For instance, just a simple example: you're spending too much money on coffee.
Right.
You spend too much if you save.
I think I know somebody who has a problem like that. I don't know.
Like I said, it's an addiction and instant gratification problem. So it will help, like you said, to reduce, but completely eliminate. I don't think we'll have to change consumer behavior altogether. And yeah.
Yeah, but there is, so thinking about how we reduce debt, and when we know that one of the biggest problem in the first place is credit cards, right? And so we had what we call debt consolidation, which is helping people bring the debt together into one loan, which is a good thing, which is supposed to be a good thing to get people into that better way,
to have a better picture of all the debt they have.
Correct. But for us, for example, at the end of the process, you would get your credit card paid off, but we didn't have a process to ask the consumer, can you cut your card and send it to the mail?
Right.
For example, that would have been
exactly
right. That's an example when I said before, true to your mission. What we used to do is, we've got that consolidation loan, great, but then I could see in the data that some people kept using their card. Now that it was empty, they would use it again.
Right. Mm-hmm. Oh, I solved it. Cool. So it's like working out, right? I worked out today. Cool. Right. I could have that hamburger tonight.
Right. So that's why, like, when you look at your overall business, when you look at your roadmap, when you look at your processes, build what's true to the problem you're trying to solve.
Sure.
And
so that goes into mission, right? Because the company would have no financial benefit in doing that, none at all, but they would have a social benefit, right? So that's thinking of the triple bottom line and having a positive impact on their community, on their clients, essentially. And it could also be a benefit, even though you're not getting that financial return. The company starts looking, at just as branding, they're doing the right thing, and that could even help in the long run.
Right.
Yes.
And speaking of debt consolidation, it's very interesting that you brought that topic up, because one of our startups from our first incubation cohort from the Ascension program, Affiliate, Patrick, he's literally involved in that, and I keep having conversations with him, and he's of the same opinion that it's the underlying problem is the behavior itself, and unless it's like creating a new exercise regime or changing your mindset that you take care of your health. A lot of people don't do that or can't do that or don't want to do that. And the same is about financial health. It's a different mentality and a different mindset. Education definitely plays a part there, and fintechs are going to help there. In the end, it's a consumer that has to make that decision to make that switch.
And you have to start young too. I think that's
exactly.
I think that's really a key point. Right. Like in Canada, for example, I'd be curious to know what you do in Australia and New Zealand, but home economics used to be taught in high schools and was removed. So I think it was with the La Réforme Scolaire so I started high school when I was in 2005. So I think early 2000s it was cut as a class, which is a very important class, right? Because if you don't know how to manage your personal finances, it could lead to really major problems in your life.
Right. It's the same, like, how many times have you been taught to do your taxes, which is really simple based on the tools that you have available right now. Anyone can do their own taxes, but it's not taught at school. So that has to change, and fintechs will do the job, I think.
Cool. Just as I have two final questions, but before we wrap this up, this is going to be more of a discussion, but I want to know which fintechs in Australia or even around the world you find the coolest, like the coolest fintechs for you.
Okay, so just in that space of debt consolidation, there's an American startup which I really like, how they reimagine just the user experience of the product, and it's called Meet Tally.
Meet Tally.
Meet Tally, and I just love the experience of taking pictures of your different cards, putting them into your digital wallet, and then Tally paying off your credit card, your fees always at a better rate than what you're currently paying.
Right.
And I love the team, what the guys are building. So I think that's a great company in the fintech space.
How long have they been around?
I would say, top of mind, maybe 4 years.
And they just operate in the States, or?
They are, I think so far. The other company in the state that I absolutely love is Payoff. So that's part of the Harmoney group, which has Payoff and Joy. Payoff is again a debt consolidation company that's only doing debt consolidation and trying to do it in a way that's really customer-centric with a lot of educational content, a whole dashboard, focus on content, explaining people, the right financial behaviors. So I really like what the guys are doing. And they are the first finance company bringing really psychology inside, trying to change consumer behavior their team is made. So I think, as fintech, having psychologue or having people understand consumer behavior in your team, that's, a very good thing to do, but you need to get to a certain scale. Excluding that, last few years, I've had a lot of interest in neuroscience and how our brain actually work. So I get fascinated by how, by looking at brainwave data, we can in real time visualize our feeling and emotions. And companies in that space, and there's a few of them that really get me interested. Even ways to save the planet by using technology that enable people to use less water when they grow their own vegetables. I mean, there's many startups that I like, but
those are some of them. Cool.
Yes.
And so for our community, for the people watching, we have a lot of entrepreneurs, especially early stage entrepreneurs, and you've built 3 companies, one had an exit. What would be some, like, a top 2 or 3 tips you could share with some founders to help them on their entrepreneurial journey?
Cool. Number 1, find a massive connection to the problem you're building. Right? Don't do it for the money. Don't do it for the ego. Don't do it for whatever. Do it for the impact. Do it for the connection that you have with the problem. Number 2, get a coach, get a mentor. You can't do it alone. It's too hard. You're gonna be lonely. You're gonna be burnt out. Right? You don't want to do it in the burnout way. You want to do it in the healthy way. Wake up, have your routine, meditate, journal, and stop when it's 6 p.m., 7 p.m., 8 p.m. Go home. Spend time with your friends, your family. Saturday, Sunday is the weekend. It's not made to work. And third thing is capital is important. Capital is king. Think high level of your business. Don't be inside the business. Get out. Look at your runway. Visualize where you're heading. Be super clear of your vision. And just inspire people around you. It's all about people, right? You have to develop your emotional intelligence. You have to get people to follow your passion. Just become great with people.
I think that's some great tips.
Yeah.
So to conclude, I was saying earlier his trip around the Americas. I don't know if you want to talk about it. It's amazing. So he bought a motorcycle in New York. Now he's in Montreal, heading off to Alaska, and then driving down to Patagonia, all while trying to build a startup. So just chat a bit about that, because I'm a traveler at heart, and this guy is doing it to the next level. So where could people follow you if they want to keep in touch? Or?
Sure. So I'm posting. I have a website that's called the Wonder Expedition with the wonderexpedition.com, and Instagram. So posting pictures and stories of my journey there, and I'm blogging as well every week. They're kind of just a child dream that I've had in my mind for some time now. And 4 or 5 years ago, I started to talk, I want to do this. And at the time, my friend's girlfriend was telling me, before you do this, can you just go around Australia? Look, it's big enough. So I went around Australia. I loved it. And then I went around New Zealand twice. I loved it. And now was the time to just do that.
And you're trying to build a startup along the way.
Yeah, so initially if you look at the website,
because traveling around the world's not enough. You gotta add some spice.
It's great to travel, but first of all, I don't have the financial capacity to not worry about the money forever. Like I'm super fortunate that I could not do nothing for 2 or 3 years, but then you have to go back to the grind. So which is not super inspiring, but so yeah, what am I saying?
Your startup, the idea you have, because already this morning you got a first lead and you're trying to build. You're not sure exactly what it is yet.
Initially, I was thinking to do 3 days of writing, 3 days of walking, because when I went around Australia, I did it remotely while keeping my job, and I only write on the weekend.
Right.
But here, I'm wanting to stop in Mexico, Costa Rica, Nicaragua for a few months and just build a company. I think when you're on the road, though, you have limitation for what you can go after. So for me, for example, building an online course, building something very small, very compact that can give me some benefit of impacting people's life, but also some cash flow is what I'm going to focus on the first step. And then we'll see whether I can fulfill my bigger idea or not.
Cool. So on Instagram, the Wander Expedition, and well, if you end up back in Fintech, if it's a Fintech class or something, we'll definitely be in touch and share it. Maybe do a live from wherever you are in the world. So thank you so much for coming on. It was a pleasure and really cool story. Thank you, Cigar, as always.
Thank you, Cigar.
And thank you everyone for following along today's Fintech Fridays. And enjoy your weekend. Rest up, as Bertrand says. It's the weekend. It's not made for
just
work.
a call out to the founders here. If anyone want to reach out, need some help, need some thoughts, I'm happy to help. I know how the journey is hard.
Cool. Great. Well, have a great day, everyone. Take care.